What happens next could shock everybody. Is it time to sell right now? Well, that's exactly what this pattern is telling us with Bitcoin on the left and the S&P on the right. It says more down right now. This is also notable because we have 565, 564, and 563 as our current monthly highs. If we can't hold on to these areas, we could potentially go as low as 550 if we lose our 550 pivot. Here's the interesting part. With all these recent ChatGPT updates, I asked it, where could we go? And originally it was doom and gloom, but then I realized it made a big mistake as I was recording for the first time. It told me conservative estimates of 445 to 460. I'm like, okay, well, that seems like the wrong price. It's 100 points too low. And then it told me, is that price correct? And then it said, oopsies, 570 to 590 is a conservative estimate. So is that where we could go next? Oh my goodness. Is what I just showed you not going to happen? Are we actually going to blow through these current all-time highs and then go where? Even higher. So it's saying, hey, beep boop, 570, 590. That seems like a good conservative number. I'm like, whoa, okay. So this thing seems a little bit biased to only go up. And then the second thing I thought was, when's the last time we were trading at roughly 540? Because what it basically said is, looking here, at 445 to 460. I'm looking on the chart. I'm like, okay, well, 479. I'm looking at 450. So this data is old, is what I'm looking at here. Because when I asked it, the original question, I said, where could the S&P go? Provide a price prediction for the next 2 months. It gave me all this mumbo jumbo. Then I said, all right, no, please just give a rough guess in the next 60 days. So it thought in 60 days from right now, this price seemed good. So I'm impressed with these ChatGPT updates. I'm not going to lie. I also asked it how to count candles. So I said, here's a candlestick pattern. Here I said, here's a chart. Can you what did I ask it? I said, how many candles in this image? Right? I'm showing a candlestick pattern. You guys should be familiar with this. And it basically says blah, 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 blah. Does this chart have a higher probability of going up or down? Hey, actually provided pretty good analysis. And then it also asked, can you actually tell me the number of days, right? I will need to analyze this more. However, if you can give me the answer, that would be great. So ChatGPT definitely seems very, very interesting. But what I'm really asking myself is all this stuff like kind of baked in? Is all we have to do really look at a human version of finding out whether or not we can do conditions? So if this condition is met, then if yes, this, if no, this. That's what I'm trying to do. This is me trying to give you the algorithm, right? That's what I called my product. So this week, what do we have? We have a weekly higher high. Look at that. Last week's high is at 563.0. I'm looking at the number here, 563.03. Here we got to 563.11. There we go. The bulls did it. So now the question is going to be whether they hold on to it. So we're likely to form a weekly higher high. We got it. Now the question is whether we can remain over this week's high. ChatGPT thinks 570, 590 is conservative. Cool. Let's go to blue skies. If not, that's a failed breakout now. As a reminder, this is really important because of the pattern I just showed you. This one here. So if it's time to go lower, like it's right here. It's right now. It's like right at this exact moment. All right, there you go. And we're expecting I'm expecting a hawkish 50 basis point cut on Wednesday now. That's what I think is going to happen. What's a hawk? A policymaker or advisor who prioritizes controlling inflation and may favor higher interest rates to keep it in check. I still think Jerome's going to say that. I'll touch on that in a moment here. But remember, there's only two scenarios that can play out. Number one, we make a new all-time high. If we're going to go to 600 plus, and I got a note here, how are we going to go to 6,000? Well, that would basically have to happen with, where am I here? Here we go. Well, we got to make it to 566 first. We got to form a monthly higher high. If we can't go to 566, how are we going to go to 600? How are we going to go meaningfully higher? Why? Because we got 50 points of downside to 510 of support for this month. And then next month, because we're roughly half done, we now get ratcheted up to the 537 area. Here's the big question. Is the Fed ready to unshackle the U.S. economy from its soft landing? Here's the title of the video before they updated it. The interest rate cut coming too late to avoid recession. So then I searched here and I'm like, okay, they mentioned recession 6 times. I'm like, whoa, they seem pretty adamant here about recessions. So just before we talk about what that means, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you very much ahead of time. The consequences of falling behind the curve can be severe. Only once in its history in the mid-1990s, according to the former vice chair, Alan Blinder, has the U.S. actually pulled off a soft landing. That's when higher rates imposed. All right, only once. Cool. All right, let's listen to this clip.
Spiral is entering a dangerous new stage. While the rest of the world is worried about rising costs, China has been grappling with falling prices since late last year. Data released earlier this week confirmed that across large parts of the economy, consumer prices are still barely rising. The danger for China is that deflation could snowball by encouraging households already hit by falling wages and slumping property valuations to cut back on spending because they expect prices to fall further. That in turn hits company profits, leading to more salary cuts and layoffs, ultimately bankrupting families and firms. And worries about the prospects of the second largest economy are weighing on the country's stock markets, where one key index has been underperforming global equities for the longest stretch since the turn of the century.
All right, so why did I show you that? Well, that's because you want to be careful of what you wish for. Over in Europe, we're looking for inflation to come down to 2.2%. So that's really low. The US is in the twos as well. So if they continue to be too hawkish for too long, hey, we might get deflation or a reverse wage price spiral. We're still sitting here at 50, and right now the odds have actually shifted from 50-50 on the weekend to 61% chance of a 50 basis point cut now. Okay. And Amazon's CEO wants workers back in 5 days a week, and he wants a leader management team. What does it sound like? It sounds like a man getting ready for a downturn, or what? A recession. Apple also got downgraded. That's why the stock is down today. So it's down nearly 3% on a downgrade of iPhone 16 shipments. Into the last 4 hours, stocks are pretty much flat. Remember, going into Monday, that's when there's the most amount of news. Friday night, Saturday, Sunday, Monday morning. So if this pattern is really playing out, like, how can we be prepared for it? Because like I just said, well, that can mean that the Chinese stock market is going to be a preview for what could happen to America, right? Good old America. Well, look, this chart looks terrible, and it's getting even more terrible. It's looking like maybe it wants to go up now, but if a lagging economy and deflation is hurting China, what if the same thing happens to the US? Does the chart look a little bit different? Yep. Up, 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 up. It looks very, very different, which means what? More risk. That's right, more risk. And there's only two scenarios, remember. So if that's what's happening, what can we actually do? Well, we can either pause the video and go through what we talked about at the very beginning and think about, all right, how could this actually happen? Well, historically, there's a 4 to 5% pullback going into October. Ironically, the number that our algo is also looking for: ES rollover, retail sales, European CPI, and then FOMC decides. Right back in neutral. And again, we're looking to see if this is a pop flag pop. We got to go back into greed now, right? That's the new all-time high. And then finally, Adam Parker, I like this guy. 50 basis point would weigh negatively on equity multiples. What is he basically saying? That could be a hawkish, where is it here? That could be a hawkish 50. Yeah, hawkish 50. S&P will be more range bound for the next 2 months. Okay. ChatGPT thinks straight up, can't break through 6,000 without tangible catalyst. AI, that's what I'm looking for. There we go, doom and gloom. And then the bull case here, odds of a 10% move higher or lower are roughly the same. So think about that. If we're basically right here at resistance, I'm talking within literally 1% of making a monthly higher high and going to new all-time highs. If we can't go up 1%, how are we going to go up 2, 3, 10%? I don't know. Extremely likely that revenue estimates will be revised downward, which means that the next catalyst is going to be October earnings. All right, with that said, watch the video on the left or come hang out with me at 9:15. Thanks so much for tuning in.